Hi, everybody. Thomas here. Time to talk about another stock and consider it whether or not we are looking at a sucker's bet in the current market or whether or not it might be a smart buy. Today, I want to focus on one of the largest companies in the entire world, something that just about every single one of us are using, and that's Amazon. Here's our chart for Amazon. This is a stock that has been following a nice upward trend throughout the course of the year, which is pretty easy to see when we look at the way that it has moved up from a bottom at the end of December of last year at a little above $80, all the way up to its current price, a little above $137 per share. Now, that looks really nice, and that's attractive if you were one of the people that jumped in at the end of last year or even in the early part of this year. But if you're looking at this now, it begs the question of whether or not there is a good opportunity to work with. As always, I like to focus on two specific kinds of patterns to try to identify what I consider to be high probability setups. Since the stock was significantly below the 200 period moving average when it started its latest move, the pattern that I'm going to try to focus on and put the most emphasis is going to be a bullish, and I'm just going to put a B here for bullish level 2 pattern. Now, the bullish level 2 pattern is pretty simple, and if you haven't already familiarized yourself with this from some of my previous videos, I'll just demonstrate it here really quickly. First of all, I like to focus on two specific kinds of moving averages over this period. I'm using 1 week charts, meaning that every single candlestick that you see on this chart covers 1 week of time. This blue line is the 200 period moving average, or 200 weeks in this case. And this is moving slightly upward, and we want it to be flat or slightly upward as it is going up right now. The ideal pattern for the other moving average, which is a 20-week moving average in this case, would be finding a bottom below the 200-week moving average and starting to bend up. This happened in the first couple of months of 2023. Once we start to see the 20-week moving average start to flatten and bend up, we start to look for other signs from price action in the form of good candlesticks. The ideal signal in these circumstances comes from a hammer. In this case, that came right here. A hammer is a candlestick that has usually a long wick or a long line here, and then kind of what looks like a hammer at the top. This can be filled or open. Either way, it is generally a bullish indicator that the stock's momentum is increasing when you start to see it develop and appear in the kind of pattern that I'm describing with these moving averages. So that is not the case right now. However, one of the things that is really interesting about this is that the stock has just recently broken above 200-week moving average, came down a little bit in the last month or so, but used level right around $130, right in the neighborhood of this 200-week moving average as support, and over the last few weeks has started to move up. This week, it looks like it is forming exactly the kind of hammer pattern that I was just talking about. So that does suggest that bullish momentum on Amazon might be picking up. And when a stock starts to develop an upward trend, one of the things that short-term traders at least like to look for are opportunities to leverage signals within that trend. Stocks rarely follow that trend on a continuous basis, day over day, week over week. If a trend is going up, you're not going to see every single day or every single week up, but they do experience some of these pullbacks, kind of like what we had about a month ago against that trend. And short-term traders will like to try to identify points where it might find a level of support, like I said, as it happened earlier at around $130, and then see some indications that it is rallying and bouncing upward. So it does look like it might be setting up that kind of a pullback and bounce pattern within the overall upward trend that we're seeing. So that could be interesting from a technical standpoint. It does beg some questions about where the stock's potential upside is, as well as where the downside might be. If the stock does reverse, if this previous high, which was a little bit above $140, doesn't hold, how far could it go down? That's an open question that we can analyze and we'll take a look at a little bit later in this video. It also begs the question of whether or not the company's fundamental strength and value proposition is something that might offer a good value. So let's go ahead and move into the next phase of my analysis, and let's take a look at fundamental metrics. Amazon is one of the largest companies in the entire world, with a current market cap a little above $1.4 billion. Their free cash flow pattern over the last year is showing signs of strength. That's a very good thing, considering that a year ago, the company's free cash flow was almost negative $20 billion. It has increased steadily quarter by quarter since then, including an increase from over the last quarter from 3.3 billion negative to a positive almost $9 billion. So that is a net positive. Free cash flow yield is a metric I just used to try to establish what the free cash flow relative to the company's market cap is. Relatively minimal in this case at 0.56%. That's neither positive nor negative. The more interesting thing here is the overall pattern of increase over the last year. The company's balance sheet is also very strong. We can see that cash over the past year has also increased. It was pretty stable over the past 2 quarters. 63.9 billion in the most recent quarter against 64.4 billion in the quarter prior. So it dropped just a little bit, but it is also higher compared to a year ago when it was about $58.6 billion. One of the important things about looking at available cash is its relation to long-term debt and how that may inform the company's ability to service the debts that they have. In this case, cash and liquid assets are a little above long-term debt, which is about $63.1 billion. This is a number that has increased over the last year from about $58.9 billion. The increase in debt is a concern, not necessarily a disqualifier, but it is something to be watched because the company is leveraging long-term debt more than they have. Now, another element that really points to whether or not a company is operating on a profitable basis and can continue to service the debt that they have, whether or not they have the financial strength to reinvest in their business and find other ways to grow, is in its profitability metrics. I like to use net income versus revenue. I start by looking at net income versus revenue over a trailing 12-month period. That's the TTM right here. We can see that in this case, dividing net income by revenue shows 2.43% net income to revenue. That's a little bit minimal. That implies that their margins are traditionally very narrow, which isn't really all of that surprising considering that we are talking about Amazon. The more interesting element of the net income picture really comes from the most recent quarter. In the most recent quarter, this same measurement translates to 5.02% net income to revenues. In other words, implying that profitability is increasing over the last year. So this is a net positive as well. I like to focus on stocks that pay a dividend. In fact, if you're a subscriber to my Revel Income Trading Alerts, you will not see me write about stocks that do not pay a dividend. Amazon does not pay a dividend, which is interesting considering the amount of cash they have, the overall relative strength that they have. They could pay a dividend pretty easily. As far as valuation metrics are concerned, my combination of price to book and price to cash flow analysis compared to their historical levels shows that the stock's fair value target should likely be at around $154. Now the stock is sitting right around $137 right now. That means that there is roughly about 12.19% upside from the stock's current price. That's not bad. In fact, that does suggest that the stock could still be an interesting value. It's not quite what I would consider to be compelling, but it is still interesting. And for some value investors, 12% is more than attractive enough. I would find a very compelling discount price for Amazon at around $123 per share. Keep in mind, my fair value analysis is around $123 per share. Let me just go ahead and draw that line here. That's going to be just a little bit above this level. One of the elements that we want to consider here, if you're thinking about taking a trade on Amazon right now, you should naturally be thinking about how much upside there is compared to how much downside. The stock is sitting right around $137 right now, with its most recent pivot high sitting a little above $140. I'm going to go ahead and call it 142. That means that there's about $5 of upside to that pivot high. I've drawn a Fibonacci trend line here to establish some other target levels to keep in mind. I attached the top of this to this prior high back in June of last year, which is right around $147 per share. So if the stock can break above $142, that means its next likely level of resistance where it's going to hit a ceiling and possibly come back down is going to be at around $147. So the upside is roughly $5 to $10 away right now. What about downside? What does that look like? This is one of the reasons that I've drawn my Fibonacci trend lines, is to try to think about how far the stock could drop if the recent pivot high provides a level of resistance where it starts to reverse the trend that it has been following for most of this year. The first point of reference that I would use for that support should be the 200-week moving average, which is right around $135. So 135. If that does not hold, the next level should be right around the 20-week moving average, which is right around 127. So right here at 127. If it breaks down further, then next support should be somewhere between this 123 fair value target that I previously identified and $122, which I see from the 38.2 retracement line. This is a very high probability support level if the stock does begin to retrace and comes back down to around this level. So right around, I'll just go ahead and call it 123. So its current fair value target looks like it, if the stock does start to drop and start to approach that level, should provide some pretty strong support. If it weakens even more, a lot of times stocks, as they develop strong upward trends, the way this has so far, will retrace about half of the size of that trend. And that level is right here at around $114 at the 50% retracement line. So all told, that means that the total potential downside here, and I'll just use the first two levels here. I'll keep 123 and 114 kind of in the back pocket in case the stock picks up more bearish momentum and breaks down below these. But for my reward to risk analysis, I'm going to focus on these first two levels. We have first supported around $135. So that's about $2 away from the stock's current price. And then next support, if that breaks down, at around $127. So that's about $10 away. Now, if we use just these first two numbers, then you have 5 to 2 risk to reward. That implies that this could be pretty positive and could provide an opportunity for a bullish trade, so long as A, you are ready to take profits right around that $142 level very quickly, and 2, to get out right around that $135 level if the stock starts to break down. So you've got to be willing to hold on to those levels as break points, either to take profits or to get out of the trade and try to limit loss. Because if you don't, you'll be exposing yourself to this potential $10 downside, hoping for about $10 of upside, which really just shifts your reward to risk ratio to only about 1 to 1. What does that mean in terms of whether or not Amazon is a sucker's bet or a smart buy right now? This one is a little bit open to interpretation. I would say that there are some interesting signals right now to think about taking a short-term trade on Amazon. There is even a little bit of upside on it, with about 12% upside from the stock's current price, up to a little above $150 on a much longer term basis, but it would have to break up above this $147 level first in order to get to that. If you want to take a trade, you can, but keep in mind this 5 to 2 reward to risk ratio. Get out if the stock is sitting at $142, take profits, limit your losses, get out if the stock drops below 135. I hope this has been useful, everybody. If you like this video, please go ahead and subscribe to my channel. Thank you for your time. See you again soon.